All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Friday, everybody. Happy Jobs Day. Today is June 6, 2025, and the top story this morning is the May non-farm payrolls report, aka the jobs report. It just came in, and all the press is right now saying market rallies on stronger than expected jobs report, and I would submit that no, it was not a stronger than expected jobs report. This was a awful jobs report. As always, the market just takes the headline number, does no due diligence, no math. Why? Math is hard. And they just say, well, nope, the headline number is bigger, therefore beat. This report sucked. Let's talk about it, shall we? 139,000 jobs added for the month of May. The market was only expecting 130,000. So if we all stop reading right then and there, it's a beat. Problem is, I can't stop reading. I can't help myself. I like to know a little bit more other than what CNBC tells me. And yikes. April's jobs report, that magnificent 177,000 jobs that were added in April. Nope. Some of them are gone. 30,000 revised away down to 147,000. So right away, the whole jobs beat is gone just with the downward revisions to April. But wait, there's more. The March numbers, that magnificent 185,000 jobs number from March, that number has been revised lower by 65,000 jobs. So that's now down to 120,000 added. So we've got 95,000 in downward revisions, and everybody's saying, yay, we beat by 9,000 on the headline number. Does this look like a strong jobs report to anybody? I don't know. Some of you guys, you kids in the back there, anybody? No, this was not a good jobs report. This jobs report sucked. The unemployment rate held steady at 4.2%. However, again, you got to keep reading. Significant figures will get you every time. Back in April, the unemployment rate was 4.187. So we rounded that up to 4.2%. In May, it was 4.244. There's two fours at the end there. 4.244 for May. So we round that down because it hasn't hit 4.25. So really, we actually did see the unemployment rate tick up by 0.5% for the month. But you know what? Rounding errors being what they are, we're going to report that as just steady. Again, unemployment is rising. Fewer jobs added. Is this a better than expected report yet? I don't know. Maybe the labor force participation rate improved. Maybe that's why this is a better than expected jobs report. Labor force participation rate, 62.4, down from 62.6. We lost, 0.2% in the participation rate. So that's actually worse than expected. Gosh, it's almost as if this jobs report isn't really that good. Oh, also, we lost full-time jobs. We gained part-time jobs. Interesting. We've seen that before. But you know what? We've got more self-employed, unincorporated workers. So plenty of people are finding work as Uber drivers or OnlyFans girls. So, hey, the economy's just rip-roaring. You know what? Whatever. Let's just mindlessly bid up stocks because number go up. This was a really bad jobs report, guys. And look, I've only had about 20 minutes to read into it. And just what I've found in the first 20 minutes I've looked into it is not good. And all the headlines are jobs beats, better than expected, more than expected. That is the wrong take. That is superficial, lack of rigor garbage. And so the market is having the wrong reaction to this report right now. We're going to go into some of the attachments in the jobs report. I'll show you the actual numbers and, why I think some of them are really bad. Also, the other big thing going on, you guys may have noticed, there was a little bit of fireworks, a little bit of drama yesterday. And by a little bit, I mean a whole lot of it. Elon and Donald have broken up or they're on a break, depending on who you ask. Maybe they're still going to be friends, but, they're going to see other politicians. Elon Musk and Donald Trump blew up yesterday for everyone to see. It was on full display all over the great, big, beautiful bill that's going through Congress that does nothing to cut spending. It increases the deficit. We're maintaining $2 trillion a year deficits. And Elon is saying, you know what? I destroyed my business empire politically because I wanted to cut spending. So I did this Doge thing. You guys took everything I did at Doge. You ignored it. And then you went and cut and increased spending again, like we all freaking knew you were going to do. And Elon's not happy about that. And so he voiced his displeasure. And of course, the Donald, demanding absolute obedience at all times, went on Twitter and started threatening him and said, oh, maybe we'll cancel your government contracts. And Elon says, well, I'm going to decommission my Dragon capsule, which is the only way you can get to the space station. And then, Trump says, well, this or that, or he's gone crazy. And it ultimately culminated with Elon claiming Donald Trump was on the Epstein list. Whoa, that escalated quickly. By the way, the whole Epstein list thing, Donald, easy way to prove you're not on it. Release the freaking list. We've had how many presidents from how many different parties now have failed to release the list? Remember the stupid crap with the binders and all that? Release the list. Stop scrubbing the names that you want to protect off of it, and stop saying, oh, it's sitting on my desk, it's right here, Schrodinger's client list. No, just release the freaking thing, and then we can put that to bed, and the people that are in it can be ridiculed and mocked and prosecuted and thrown in jail, and the people who are not on it can go about their freaking lives. We can put this ugly period behind us. By the way, speaking of the big blow up yesterday and the big beautiful bill, I'd just like to thank the sponsor of today's live stream, Grow-A-Set Testicular Fortitude Capsules. Are you a Republican in Congress who's more worried about your reelection and maintaining your majority while doing nothing and letting the country's finances continue to go to shit, running $2 trillion deficits? Ask your doctor about Grow-A-Set. Also going on this morning, guys, we have got Broadcom earnings came in. It was a beat, but expectations were pretty lofty. The company has rallied like crazy. And so it was a beat, but it was a narrow beat, not enough to impress investors. That stock is selling off a little bit this morning. Shares of Lululemon are getting crushed this morning after cutting their guidance over tariffs and talking about price increases. Oh my God, Lululemon clothes are so freaking expensive to begin with. I can't believe they're getting more expensive, but I digress. Look, apparel companies are in dire straits here, guys. We've seen apparel retailers, apparel makers. They're all getting clobbered by the prospects of tariffs because they all make their clothes in sweatshops in Asia. Nothing new there. That stock is down high double digits this morning. We've got a rice shortage in Japan. That's interesting. Prices of rice in Japan have more than doubled in a year. And the politicians in that country are feeling the heat from it. And the Bank of Japan, we've got another Schrodinger's appearance here. We got a weird headline from the BOJ this morning that is both hawkish and dovish at the same time, depending on how you look at it. So until they actually decide what they're going to do, we've got Schrodinger's central bank sitting in the middle of the Pacific Ocean. Guys, we got a lot to talk about this morning. How about we shrink that big melon of a head and let's see what's going on in markets this morning. Hey, don't forget to hit that like button for the algorithm. And if you're new here, hit that subscribe button. Come on back tomorrow because we do this one every day. Come and have your coffee with the melon heads. And right now we've got the S&P is up 51 basis points, 0.86% to the upside. Almost all of those gains coming in the aftermath of the jobs report that was not that good. The Dow, meanwhile, is up 361 points, 0.85% in the green this morning. Again, most of that coming following the jobs report at 8:30 a.m. Eastern time. And the NASDAQ leading the way higher, up 191 points, 0.89% higher for the NASDAQ. So we got stocks are up across the board on a stronger than expected jobs report. I hate saying that. We've actually got the dollar is a little bit stronger here. People are starting to price out rate cut expectations, again, mistaking this for a strong jobs report. So we're seeing the dollar strengthen by 40 basis points, 99.14 on the Dixie. And we are also seeing higher interest rates across the board this morning, except that 1 month. That's down a little bit here. The 30-year Treasury, 4.937. That's higher by 5 points and change. The 10 years at 4.461. That's higher by almost 7 points. The 2 years at 3.995, higher by 7 points and change. And the 1 month is at 4.227. That's actually down by almost 3 basis points. Looking over at the commodities board, we have got a lot of green this morning. Once again, gold hanging on to yesterday's gains. We've got spot gold at $3,357. That's up by another $4 this morning, or 0.13%. But check out silver. Spot shiny, $36.30. That's up another 65 cents this morning, or 1.83% higher. Have I mentioned that I like the shiny? We'll look at a chart of silver in just a second. Let's get through some of the other ones here. Copper is a little bit lower here by 0.15%. Platinum still running 3.7% higher this morning. Palladium joining in on the action about 3.9% higher. And West Texas Intermediates higher by about 0.4% here, $63.64 a barrel for July WTI futures. I promised you guys a silver chart, and take a look at that big, beautiful silver chart there. Daily candles showing the price of silver. This is front month futures contract. This one lags by a couple of minutes on TradingView, but we're at $36.28 here. We have broken through the prior highs. And look, let's change this a minute. Let's just go ahead and look at 1 month futures. All right, let's ignore the silver squeeze text there. Only 2 times in history have we been higher than we are right now. We had that in 2011 during the great melt, if you will, in the aftermath of the budget crisis there, when, of course, spending went crazy and silver rallied rapidly to nearly $50. And the only other time we were higher than this was during the Hunt brothers' attempt at cornering the silver markets. And guys, both times we broke this level, you'll notice that the silver price was in the process of going vertical, heading towards $50. And well, that's our comps right now. So you got a lot of people out there right now are starting to say $50 silver. Could that be in the works here? Hey, $50 is a long way from 36. All right, that's a lot higher from here. But the only historical precedent we have at this level was a vertical move direct from 35 to nearly $50. Maybe, just maybe, that's what's happening in silver. I don't want to jinx it, but there it is. I said it. Anyways, I like the shiny. Bitcoin, meanwhile, had a really bad day yesterday, recovering most of that today. We're at $104,041, only a little bit lower than we were this time yesterday. This is the price shown on Coinbase. But I would add yesterday, Bitcoin was selling off the entire time that Trump-Musk feud was going on. And if you look at the move that Bitcoin was making yesterday in minute candles, it was kind of matching, maybe not with the same ferocity, but directionally it was matching what Tesla shares were doing. So that's an interesting correlation. Not really sure if that's legit or not, but Bitcoin recovering a lot of that this morning. A little bit lower here, threatening a breakdown, by the way. That would have been the first lower low that we've seen for a couple of months now. All right, let's talk about the jobs report here. First things first, the headline number, 139,000 jobs added versus expectations of 130. That is down from the 147 that was added in the prior month. And I would add, guys, the prior month was 177,000. So, they're saying this is a beat. Look at this chart. Does this, even if we ignore the downward revisions to March and April, does this look like a strengthening labor market? Not really. The headline number 139 was okay, better than average. But again, I can't overlook those downward revisions. And you can see this here in the text. You actually have to read the freaking reports. You can't just read the headline on CNBC. The change in total non-farm payroll employment for March was revised down by 65,000 from 185 to 120. And the change for April was revised down by 30,000 from 177 to 147. These downward revisions are getting obscene, guys. That's almost bigger than all the jobs added. I mean, look, 139, let's take away the 95,000 jobs added or 95,000 jobs lost from prior months in the revisions. We've only got a net add of 44,000 jobs here. That's pitiful. That does not even keep up with population growth, not even close. So no wonder the unemployment rate is rising slowly. We're not adding enough jobs. Now they're saying it's due to lower response rates or, businesses were slow to respond. Whatever the reason, guys, I can't help but think every month these revisions make the front month look better, and then we quietly revise it down later on. I can't help but think it's got to be political influence is driving this. A little bit of sectors I want to add here. We've had 62,000 jobs were added in healthcare. That's not really productive work per se. Leisure and hospitality, those are low-wage part-time jobs, added 48,000. Social assistance, again, not really economically productive work, 16,000 jobs added in that category. The federal government lost 22,000 jobs. So maybe some of those job cuts at the federal government finally starting to show up in the jobs numbers. But they did mention that people who are still receiving severance from the government aren't counted as employed in the survey. So we're probably still looking at a couple of months of job cuts at the federal level just from people who have already taken severance and buyouts and already stopped working, but because they're collecting that severance, they're counted as employed. Also, I like to take a look at table A9 in these jobs reports because you get some pretty good granularity on the data. This is where we talk about full-time versus part-time workers. This comes from the household survey, slightly different data set than the headline number you hear. That's the establishment survey. But we had 134,840,000 full-time workers for the month of May. That's down from 135,463,000 in the month of April. So these are seasonally adjusted numbers, by the way, but that is a loss of 623,000 full-time jobs in the month of May. Is that a stronger than expected jobs report? Losing 623,000? Somebody help me out. Is that a good thing? Part-time, seasonally adjusted, we went from 28.52 million to 28.55 million. We actually added 33,000 part-time jobs. All right, hey, we lost 623,000 full-time jobs that come with paid time off and healthcare and benefits and retirement plans, but we added 33,000 part-time jobs that have none of those benefits. Yeah, stronger than expected jobs report. Also, multiple job holders declined on a seasonally adjusted basis. Multiple job holders down by 283,000. A lot of people lost their second job. Or maybe those people are just doing better and they decided to quit their second job. Or maybe they said, you know what, I've had it. I can't take it anymore. Life is just too miserable working two jobs, and they quit. Either way, you got fewer people working multiple jobs. And on the self-employed unincorporated, which is basically gig work, we added 66,000. So it's good news. You know, the girls can find work on OnlyFans. The guys can be DoorDash or Uber drivers. Not exactly signs of economic prosperity there in the data. Now, if we take the non-seasonally adjusted numbers, they look very different, but they still look bad. Non-seasonally adjusted full-time jobs declined by 67,000. That's a far cry from the 600,000 seasonally adjusted decline. Big change in part-time jobs, though. On a non-seasonally adjusted basis, part-time jobs lost 601,000. That sucks. That's a lot of lost part-time jobs, and they're not being made up for elsewhere. And apparently about half of those were people losing their second jobs because multiple job holders declines by 330,000 if we do a non-seasonally adjusted basis. And the gig work thing gets even bigger if you don't do seasonal adjustment. 238,000 jobs added in the self-employed unincorporated category. More people doing gig work to make ends meet because they lost their full-time or their part-time job. Guys, these numbers suck. How are they reporting this as a stronger than expected jobs report? Unemployment rate at 4.2%. That is flat for 3 months in a row. But again, Nick Timorreos, a.k.a. Nicky Leaks on Twitter, he pointed out that you actually had a 0.6% increase in the unemployment rate. But because of rounding, it hasn't yet shown up in that number. So, you know, a slight uptick from here will take us to 4.3 in the next month's survey. And this is kind of interesting too. Labor force participation rate. We dropped to 62.4, down from 62.6. So a smaller percentage of the population is working. It's not really manifesting in the unemployment rate, but fewer people working here. Now, the other thing I want to point out, let's zoom out to say 10 years on this chart. All right, we had a big decline in labor force participation rate after the vid, and then we slowly fought our way back up through 2021, 22, 23. Now we are falling again. We never quite recovered to the same labor force participation rate that we had pre-COVID, and now we're falling again. Again, this strong labor market, is it in the room with us now? Because I just don't see it. I see one headline number that is very deceptively crafted by government bureaucrats who have a reputation for making massive errors and then quietly revising them lower. And then that shiny turd is sitting on top of a mountain of pungent, steaming excrement that is the rest of that data that I just gave you. But the headline is stronger than expected jobs report. All right, what else we got going on? Wall Street calls Trump Musk spat a disaster for embattled Tesla. Look, we're not going to get too much into this, guys, but you know, I already said my piece on this. Cut the freaking spending. That's the takeaway. Like, forget the bill just for bill's sake. The point is cut spending. You were elected to cut spending, so maybe you should cut spending. Ask your doctor about Grow-A-Set. But Elon took it on the chin yesterday. Tesla shares got clobbered on this. And this is after Tesla shares already got clobbered because of Elon's other political activity. So Elon is writing a masterclass right now in how to piss off everybody and put yourself in the poorhouse at the same time. Not that Elon is going to be poor. He's just going to be slightly less obscenely wealthy. Tesla stock yesterday lost 14.25% off of that Trump spat. Now, Tesla stock had only recently recovered a little bit of its losses when Elon announced that he was stepping away from his government work. And of course, now they totally undid that. And now Tesla is back down in the lows here. Now, we're recovering a little bit here. You notice Tesla shares are up about 4.25% ahead of the opening bell this morning. Little bit of a dead cat bounce here. Supposedly, Musk is signaling that maybe they're going to chill a little bit. We'll see if the Donald reciprocates that chillness. I seriously doubt it. Chill and Donald don't normally go hand in hand. But for now, it has not escalated ever since the whole Epstein thing was mentioned. By the way, release the list. Easy way to put that to bed. But one thing I did notice yesterday, and this kind of, proved the point, when Donald threatened to cut Elon's contracts, Elon said, no problem. I'm going to decommission the Dragon space capsule if you're going to cut my government contract. Elon Musk says SpaceX will decommission Dragon spacecraft after Trump threat or not. Now, Musk would eventually walk back this threat. Some random person on X says, hey, don't do that. Why don't you guys take a break? And Elon says, okay, I won't decommission the Dragon capsule. But I just want to point out one little line in this article. Dragon is the only U.S. option for delivering crew to and from the International Space Station. Elon Musk is the only person in the United States who can safely put an astronaut into orbit and then safely return him to this Earth while docking with the International Space Station. Yes, Jeff Bezos can put Botox into orbit, but he can't dock with the space station yet. Boeing tried. They almost killed people and stranded astronauts in space for months. Hey, it's worth pointing out. Yeah, Elon, there's plenty to criticize Musk about. I've criticized Musk plenty in the past. What Elon has done to advance the space program is arguably more than any single person has done since the Apollo program. So maybe the guy deserves a little bit of credit for that. And, if you're going to throw a fit and threaten to cancel his government contracts, you better have a backup plan for getting astronauts to and from the space station. And right now you don't. That's something worth pointing out. Also, we got Broadcom earnings. Broadcom gives tepid forecast missing loftiest expectations. Now, that's kind of a negative headline for what is otherwise a very good earnings report. They did miss the loftiest expectations, but the problem is Broadcom was priced for those loftiest expectations. Broadcom, a chip supplier to companies like Alphabet and Apple, gave a lackluster revenue forecast for the current quarter, suggesting that the AI spending frenzy isn't as strong as some investors anticipated. Gee, you think? Sales will be about $15.8 billion in the fiscal third quarter, which ends August 3rd. The company said in a statement, that's actually a pretty good number, though analysts had estimated $15.7 billion on average. Some projections ranged $1 billion even higher than that figure. According to data compiled by Bloomberg, the outlook signals that investor expectations for Broadcom's AI-fueled growth were too aggressive. Like NVIDIA, the company is seen as a key beneficiary of the surge in AI spending. Data center companies rely on its custom chips and networking components to handle AI computing workloads. Broadcom reported really good numbers, really good revenue growth, decent earnings. It's just the company has risen so much in recent months that the stock is now down 4% ahead of the opening bell, trading at $250.49. That being said, year to date, look at this chart. It's up 12% year to date, even after this pre-market decline. I don't think Broadcom shareholders are really shedding any tears this morning. And if you zoom out to a 5-year chart, it's up a paltry 719% since the earlier part of this decade. So I think it's just a case of, high expectations a little bit too high. Now, expectations are not too high at Lululemon, and that stock is getting clobbered for it. Lululemon shares tumble 23% as it cuts full-year earnings guidance, citing the dynamic macro environment, which is a long-winded way of saying tariffs. They don't want to say tariffs because they don't want to get bludgeoned over the head by Mr. Orange in a True Social post. Dynamic macro environment means tariffs. Lululemon beat Wall Street expectations for fiscal first quarter earnings Thursday, but cut its full year earnings guidance, citing a dynamic macro environment. As the company navigates tariffs and fears about a slowing U.S. economy, CEO Calvin McDonald said in a news release that we intend to leverage our strong financial position and competitive advantages to play offense while we continue to invest in growth opportunities in front of us. He said on a conference call with analysts that he is not happy with U.S. growth and said U.S. consumers are being cautious and intentional about their buying decisions. Then the CFO, Megan Frank, added on the call that the brand is planning to take strategic price increases, looking item by item across their assortment. So, look, that's kind of contradictory there. He's saying he's not happy with growth. U.S. consumers are being cautious about their buying decisions. And then the CFO comes in and says, we're raising prices. That's a bold strategy, Cotton. Let's see if it pays off for him. But the big problem here is the company cut its full-year earnings guidance. They're expecting full-year earnings per share between $14.58 and $14.78. Previously, their earnings per share expectations were $14.95 to $15.15. Lulu's report comes after a string of retailers reduced or withdrew their guidance and said they would hike prices because of uncertainty surrounding President Trump's tariff regime. Retailers, including Abercrombie & Fitch and Macy's, slashed their profit outlooks, while others, including American Eagle Outfitters, pulled their full-year guidance altogether. Lululemon is getting clobbered on this news. The opening bell has rung. The stock is down 18%, so not as bad as the 23% decline it saw pre-market, but still this one taking it on the chin here. This is a tough time to be in the apparel business, guys. Tariffs are going to hit clothing manufacturers particularly hard. Meanwhile, we got a rice shortage in Japan putting pressure on politicians. This is interesting. This is contributing to higher inflation. This is putting pressure on central banks to act. This could influence the unwind of the yen carry trade. Watch the price of rice in Japan here. Japan's rice shortage continued to bite, with citizens queuing for hours as prices are at an all-time high. The government released 300,000 tons of rice from its strategic reserve 3 weeks ago to rein in prices, which have been driven up by a combination of a poor harvest in 2023 and an end to decades-long deflation. But the effect has been limited. The prime minister has set up an emergency committee to discuss rice policy reform, but it is complicated by longstanding rules protecting farmers from competition, including limits on rice imports. Farmers make up less than 1% of Japan's population, but are a powerful political lobby, and the food staples inflation is creating political pressures ahead of the July elections. So Japan's strict limits on their imports, their rice production has been declining double digits for pretty much like 40 years in a row now. And so they're running out of rice prices. To check out this chart, the price of rice, which is the primary food staple for the whole freaking country, a year ago in April, it was 2,068 yen for a 5 kilogram bag of rice. Now, 4,260 yen for that same 5 kilogram bag of rice. The price of their primary food item has doubled. And yet they're reporting, oh, don't worry, inflation, it's only like 4%. Yeah, if you're a poor person and food makes up a big portion of your budget, your inflation is a hell of a lot more than 4%. Rice inflation is over 100%. So keep an eye on that one. That is very interesting, and that could influence the Bank of Japan, which is sending some wishy-washy language here. Just check out this title, guys. BOJ is said to consider smaller reductions to bond buying. Now, I got to ask you, is this a hawkish statement or is this a dovish statement? First of all, let's mention the word consider. They're not doing it. They're just thinking about it. Or maybe they're thinking about if we want to borrow from some Fed language. So they are also said to consider. So this is the rumor from some guy who says they're thinking about it. All right. So now that's kind of weak. And now we're saying smaller reductions to bond buying. All right. Smaller. That implies a little bit of a maybe dovish. I don't know. But smaller reductions to bond buying. Okay, wait a minute. We're reducing bonds, but we are said to be considering reducing them by a smaller amount, but we are still reducing them. Let me ask you guys, is this a hawkish statement or a dovish statement? Because I don't know what the hell to make out of this. Until the Central Bank of Japan stops just tiptoeing around this and actually takes some freaking action, they are Schrodinger's central bankers. They are both hawkish and dovish at the same time. How's that for a little bit of philosophizing this morning on central banks? What a freaking mess they have made over in Japan as the price of their primary food item doubles. Hey, I just want to say thank you very much to ND22121, you binary melonhead you. He said, had argument with friend, couldn't articulate well. Can you explain again how Fed has been at the forefront of housing unaffordability? Awesome work always. The main way the Federal Reserve has inflated home prices is by buying mortgage-backed securities. They are buying our loans, right? The way they do this, they print money and they buy the loans. They put that money into circulation. Number one, that causes inflation everywhere in the economy, including house prices. But if you're a bank, it frees up money to go ahead and make more loans, and it also takes the risk of those loans off your balance sheet and transfers them to the federal government or the Federal Reserve. And so you're less likely to be real careful about who you're lending to because you're not taking the risk. It's somebody else's money, right? The bank makes a loan. They make a loan to you so you can buy a house. Now the bank has an asset on their balance sheet. That's the money you owe them. The bank takes that loan and they sell it to the Federal Reserve for printed money. And then the bank takes that printed money and they're off to go make another loan. This suppresses interest rates because if the bank wasn't able to sell that loan to the Federal Reserve, they'd be a lot more careful who they were loaning that money to, and they would demand a higher interest rate in exchange for making that loan. Therefore, it suppresses mortgage interest rates, and when mortgage interest rates are suppressed, mortgage house prices go higher. That is the primary mechanism by which the Federal Reserve inflates house prices. There are plenty of other ways that home prices are inflated besides the Federal Reserve. Things like first-time home buyer assistance, mortgage forbearance programs. That means you can't foreclose on people who don't pay their bills. The bailout of the banks in 2023. All these things contributed to higher prices, but the primary mechanism the Fed affects the housing market is through that purchase of mortgage-backed securities. And the Fed has something like $2.5 trillion of mortgage-backed securities on its balance sheets. Don't quote me on that number, but it is in the trillions. Thank you, ND22121, for the super chat. Good luck, sir or ma'am. Uncle Fedster, thank you for supporting the channel. It says, happy Friday, Jack. Thanks for keeping us update. Release the E-list. Amen, brother. Release the list, guys. Look, somewhere on somebody's desk, probably multiple people's desk, is a list of rich and powerful people who, I don't want to use the R word because I'll get my channel in trouble. I can't even say it, but wealthy, powerful people are able to do it, who did inappropriate things to children, and they're being protected. They're being protected by Republicans, and they're being protected by Democrats. Release the freaking list. That's all. Thank you, Uncle Fedster. Appreciate the super chat, support of the channel, sir. Hey, there's my buddy Travis from Real Estate Mindset. What's going on, Travis? He says, best morning show on YouTube. Thank you for all you do, brother. Thank you, Travis. By the way, Travis, thank you for what you are doing. Travis is taking the issue of runaway property taxes head on, guys. Check out Real Estate Mindset and look at what Travis and Mitch are doing. They are hauling their governments into court to defend what they are doing by raising people's property taxes and selling future property tax revenues to the bond market, putting themselves in debt. I freaking love it, Travis. Keep up the good work that you were doing over there, brother. Say hi to Mitch for me. And thank you so much for supporting the channel. Bonkers, Travis, bonkers. Madison Hypes, thank you for supporting the channel. It says, most interesting system you learned in nuclear power. Most interesting system I learned. Well, I've always been partial to my system, the control rod drive system. Right behind my camera, I have a diagram of a General Electric BWR control rod drive mechanism. That's one that managed to leave the plant with me when the plant closed. I like the hydraulics. If you ever have a chance, look up how a boiling water reactor control rod drive mechanism works. It's a freaking marvel of engineering. And that was my job when I started in nuclear power. I was a control rod drive system engineer. So I have to say that is by far my favorite system in nuclear power. I don't know if were we talking about physical systems or some other thing? I don't know. But there you go, Madison Hypes. Thank you very much for supporting the channel. Break My Wallet Motorsports says Katy Perry is a giant weeder rocket to the rescue. Like what the? You can put people in space and you send up your high maintenance Botox girlfriend and Katy Perry. Really, like, of all the people we're going to send into space, I don't know. Maybe we could send Janet Yellen into space and just like forget to bring her home. I just throw it out. This is ground control to Major Tom. I'm passing Mars. Are you guys going to tell me how to turn this ship around anytime soon? Hello? Is anybody there? Yeah. So maybe we'll send Janet into space and just not bring her home. Just a thought. Thank you, Break My Wallet Motorsports, for supporting the channel. And ND22121 is back again, donating JEPI dividend to you. Learn more about real-world economics from you in a week than in an entire semester of college economics. Can't wait for next short-form video. Thank you so much for donating your JEPI dividend. I don't follow JEPI, so I can't tell you anything about that particular name, but I very much appreciate the support of the channel. And I tell you, there's one thing I can't do as well as a college economics course. I can't talk, but I can't teach you incorrect Keynesian economics with the same ferocity or anywhere near the same price as a college education as you'll get in a college economics course. But hey, what is it, $50,000 a year for college to be taught incorrect Keynesian economics? What a bargain. Yeah, Phillips curve does not work, by the way. Thank you, ND22121, again for supporting the channel. And ADB Spartan. What's going on, Spartan? Suffering from cowardice. Most are worried about keeping your seat in Congress than the Republic itself. Grow-a-set may be right for you. There we go, guys. Ask your doctor about Grow-a-set. Testicular Fortitude Capsules, the sponsor of today's show for Republicans in Congress who forget that they campaigned on cutting spending. Ask your doctor about Grow-a-set. Thank you very much, ADB Spartan, for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate the super chats, guys, as well as you magnanimous Melonheads on Patreon and YouTube. Looking forward to talking to you guys at 2 p.m. Eastern time today for our weekly get-together on Zoom. Links down below to all that good stuff, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Everybody else, until next time, live small and dream big.